Welcome to Drill Down Earnings. We have the latest quarterly results, first quarter results from ServiceNow. This is the company that makes AI happen for other companies. So what a great chance to look at this company, ServiceNow. I'm Cory Johnson, Chief Market Strategist for Futurum Group. ServiceNow earnings, so interesting. Of course, Wall Street doesn't really get this company. They say beat, miss. They don't really know what they do or focus on how this business works. But yeah, it was a beat, I guess. Sales of $2.6 billion, a little bit better than estimates, but 24% better than last year. Net income for this business, $347 million, 131% better than the previous year. And yeah, 13% better than Wall Street expected. And this earnings per share up 37% over Wall Street expectations. So if Wall Street underestimated the profits and kind of underestimated the revenues, why is the stock selling off? It was about guidance, but let's look a little bit deeper at the numbers that made this business work first. Subscription revenues of $2.5 billion in the first quarter, up 25% on a year-over-year basis. Total revenues, as I mentioned, $2.6 billion, 24% growth. RPOs, the remaining performance obligations. So those are the things that their customers say they're going to spend money on, even if they haven't paid it yet. That's $8.45 billion in the quarter. That's a 21% increase on a year-over-year basis. So revenues growing a little bit faster than RPOs, but RPOs just about keeping pace. They had 8 transactions of over $5 million contracted per customer a year. That's double what they did a year ago. We'll talk a little bit more about the customers growing, not just the number of customers, but the size of those customers is so important. But the reason the stock was down was probably because of the guidance. And we'll get to that low guidance here. But as I mentioned, RPOs, remaining performance obligations, growing quite nicely for this business on a year-over-year basis. Subscription revenues, growing in the quarter that they just reported at actual growth of 25%, better than the guidance had been of 24%, and even a constant currency basis, 24% when you look at the non-GAAP number. But growth slowing down a little bit, I guess, when you saw 27% last quarter, 25% of the quarter reported today. Indeed, this company also really interesting to me when a lot of technology companies are shrinking, and some of them firing people, even Tesla laying off workers even this week. Facebook boasting in their results, Meta boasting their results about how many people they had lost to help their profitability. Well, these guys at ServiceNow are adding workers, and they're adding a lot of workers in R&D, and their R&D headcount continues to rise at a time when other companies are paring back. Well, how did the stock react to these numbers? As I mentioned, the guidance was weak. Not really weak, it was a little bit weak, but the stock sold off a whole lot. The stock was down 5% in after hours after being up 58% in the last year. But let's talk about what was weak about the guidance. They said subscription sales would grow at 22%. The analysts ought to be 22.4%, basically. So a 0.4% estimate of next quarter's numbers was enough to have Wall Street selling off the stock. But I guess if the job is beat and raise, and they just beat and kind of set numbers about where they were, that wasn't enough stock selling off after a good year. But really, when you listen to Bill McDermott, the CEO, talk about what this company is doing, they really talk about how they go into a customer and they say, we're going to change everything you do using AI for every kind of business. Here's Bill McDermott. He's excited. You can understand why.
Process optimization is the single biggest Gen AI use case in the enterprise. Any process that exists in the enterprise today will be re-engineered or engineered, depending on how messy the process is, with Gen AI. So every workflow in every enterprise will be rethought. So just think about the sales process, for example, and the whole order to cash process, for example. Or think about employees and onboarding and training them and providing all the services to them. Think about agent productivity, which is something that we're obviously moving very quickly on, where you can bypass the systems that don't integrate very well. And instead of swivel chairing around or putting customers on hold or I'll get back to you tomorrow, have real-time data, where most of the cases are deflected from virtual agent, but if an agent's involved, they have choice A or B. Which one's more pleasing to the customer? Okay, you like B, you got B, and the case is closed. Think about managing complex cases across an enterprise where all those screens are open and data is being processed. Instead of having spreadsheets and workarounds and emails and texts, now you have everything done on one platform with full case information and case closure. So literally, from running a business in every department to building software, like I said, with the breakthrough on natural language text turning into code, every single enterprise will run completely differently because of Gen AI and because of our clean sheet platform.
If Bill was sitting right here, he would say, what are you doing with AI to change your business? ServiceNow is here to help. All right, we're going to summarize these results and give you one number that will tell you everything you need to know about ServiceNow right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
All right, here's a quick drill down earnings takeaway on ServiceNow. 1 minute and everything you need to know about this quarter. The company reports $2.6 billion in revenue, 24% over the previous year, and profits, net income of $347 million. That's 131% better than the previous year. I promised you to bite one number that tells you a whole lot. This company had customers that pay over $1 million. How many? 1,933 customers spending over $1 million a year with this business. And the average that those customers are spending is not $1 million. It's now 4.6 million. So customers, lots more of them, spending a lot more per customer. That's what you want to see from any business, and you're certainly seeing with this AI provider, this artificial intelligence provider of ServiceNow. All right, thanks for listening to Drill Down Earnings. Check me out on X at Cory TV, TikTok and Instagram at Drill Down Pod. Robust earnings reports, the Futurum Group on YouTube. Drill Down Earnings, part of 6.5 Media.